Good morning, everyone. Welcome to the preseason market outlook put on by FS Grain today. We are so excited to have the opportunity to be in front of you, although not in person, at least virtually, to share some information with you. My name is Corey Winstead. I'm the general manager of FS Grain. We've got a pretty jam-packed program here today, but before we even get started on any of that, I want to take just a second and thank you. And thank you for your business and your loyalty with FS Grain. We greatly appreciate it. We know we've got a lot of competitors out there, but you choose to do business with us, and it does not go unnoticed, and so we greatly appreciate it. We do have a few things to talk about a little bit here this morning before we get started. This program is being recorded. So with that being said, we will put that live recording up in a few different places. We'll have that available on our Facebook page. We'll also have the link available on our website, as well as our quote sheet. So when we send out our quotes via email, you'll be able to get that link and see that there too. So before we get started on talking about markets and all the things that are going on there and some marketing, we do want to touch base on a little bit of our website and some other cool technology things we're working on. So with that being said, I would like to introduce our business manager, Kaylee Heap. She handles all of our technology and information strategy within FS Grain. And so I want to bring Kaylee Heap up to talk to you a little about some changes on our website. So Kaylee.
Thanks, Corey. Good morning, everybody. I'm going to take only just a few minutes and then get into the good stuff for today. So we're going to pull up some slides, just a couple of slides here real quick. So right here, as Corey mentioned, right before this fall, we launched a brand new website that we're very excited about. At the top of that page there that you're seeing is our website view from your computer. Lots of good content on that page, cash bids, futures, really good information. So a lot of stuff is out there if you haven't gone out there and looked yet. Also at the bottom there, you can see your mobile view. So if you're looking for some quick information, like cash bids, futures, our locations to give us a call, anything like that, the mobile view is really great. And then, can you click this? Yep. Thank you. And then on this next one, this one's important, I think, because most of you are probably going to our website for bids. So this is from your phone. Just a couple of screen caps here on how to save a quick shortcut to your homepage on your phone. So this is from my iPhone. At the bottom, there's a little box with an arrow. If you click that, on the next screen that pulls up, it says add to home screen. And that'll add it right to your home screen. So you can set your parameters on the filters on our website. So if you just want to see, say, Kentland bids, because that's my local elevator, you can select Kentland and then go through the process to add that to your home screen. So that all you have to do is have a button to click from the home screen on your phone. It'll go straight to the Kentland bids every single time. So just a quick little tip there. If you have any more questions on how to locate any more information on our website, please don't hesitate to reach out to your local rep. Thank you.
All right, thank you. As you can see and will notice, the speakers are all here in our conference room. We are social distancing, so just to make everybody aware of that. But I do want to spend a few seconds here also starting to introduce some of our speakers. So this morning we will have kind of a marketing strategy presentation from Allie Piper, followed up with some marketing information from Brian Rader on the markets and what's going on from a global perspective. And then we're excited to also bring in the Executive Director of Corporate and Government Relations from Growmark, Chuck Spencer. They're going to spend some time he's going to spend some time talking to you guys about what's going on with the new administration, both from the state level as well, and how policy could impact our markets and what we're doing. So also want to talk a little bit about some of the features that you have today while we're doing this presentation. So you will have both two different, what might appear to be two different kind of chat rooms. You've got your chat, which I know a lot of you have started to place where you're watching this from. So please continue to do that. But if you're on Zoom and you want to ask some questions, there is a Q&A option. So click that Q&A button, ask those questions as they come to you. We will try to get those to the speaker live. Kaylee Heap is working on that. So we'll try to get to the speaker live to answer that question during our Q&A sessions. If we cannot get that met, we will answer that question for you in a response in the chat room. If you're on Facebook, below where the comments can be made. Please ask that question on Facebook. Kaylee's also monitoring that, and we'll be able to get that information to you as well. We will have 3 polls throughout this presentation as well. So please do your best to answer the questions and answer the poll. I've been told that I'm supposed to talk to everybody about a prize at the end. So stay tuned for a fun prize and to a winner of the person who guesses the last poll right. So that's what we call a teaser in the biz, I think, right?
Sure.
Sure, okay. All right, with that being said, everyone, we do thank you again, and I am going to bring Allie Piper up, and she is going to talk to you about some marketing strategies.
Right, thank you. I feel like I'm more nervous being on camera than I would be in front of a room full of people, so bear with me. I'm gonna get started here with these charts that I put together. So you can see the diamonds. Each soybeans are on the left, corn is on the right. If you look at the left side of it, it starts with a J. On the right side of it, it ends with a D. That's the calendar year, January through December across those. And so each of those diamonds represents a crop year, starting with the year 2000 at the bottom and 2020 most recently at the top. So we've seen the high of the markets exemplified on this chart. So you can see that the majority of the highs are made during the growing season, starting May 1st through the end of September. And I guess in my opinion, that's the market's way of rewarding the unknown. So leading up to the growing season, the market has no reason to think that we're going to have anything but a normal growing season. And then as the planters start to roll, you know how finicky farmers are and those plants themselves are, whether there's dryness or even too hard of a rain to affect the germination, all those unknowns and what if scenarios kind of come in. And that's when we see the market react to those weather forecasts, giving us the volatility that we see during those time frames. So I put this forward because I want you guys to be on your toes here over the next 5 months or so and have your pencil sharp and ready to take action when the market gives us opportunities. So I encourage you to not be blinded, and you've probably heard this before, but I want to encourage producers not to be complacent. It's easy to default to what worked last year. Last year, no plan was the best plan with the market and the government rewarding producers who didn't sell ahead at all. I graduated and joined the grain industry in the year 2009. So the 08 and 09 market setup really is kind of lost on me. So I guess I'm not gonna like dazzle you with stuff that I'm really not super comfortable talking about. So I guess I default back to the year 2012. And actually in the year 2012, when the market rallied due to the drought, it rallied at the end of the summer. The highs of that crop year were made at the end of August. And actually the highs of the next 3 crop years, 2013, 14, and 15, were made in the next 60 days. So I guess that's why I encourage you to take this as one of the best rallies we've seen since then and look forward to try to make a decision, you know, and if it is a decision, hey, I don't know enough about the next few crop years, that's fine, that's a decision, but just being complacent and letting that reluctance to make a decision not be your decision. So putting your homework in ahead of time, I kind of laugh at this slide because as I like looked up photos of homework, it was either a kid like pulling his hair out or a kid that was really overselling how much he loved his homework. So I tried to pick one that was kind of in the middle here. But yeah, the homework that you can do to prepare yourself to make price decisions by penciling out your different cost structures and putting together a break-even analysis. When you're penciling this out ahead of the growing season, I recommend doing this during February and March. Use your APH as your yield estimate. Obviously, you know, that's the first thing when I ask somebody, what's your break-even cost? Well, what's my yield gonna be? You don't know that until later in the year. Maybe the opportunities have already passed you by the time you know that. Use your APH until you have a reason to use something different. And then there's also resources available for other things that are hard to quantify. Machinery and land costs are one of those that I think are tough to quantify. FarmDoc has a really great estimates of those on the University of Illinois page. And then also, if you have not locked in your inputs yet, you can get an idea from us who work with the local co-ops or your local co-op guy that you work with all the time. So They can give you an estimate of where things are now. They can probably even give you an estimate of where things are for the next year, because they're looking at that to hedge their risk as well. So looking at a general break-even analysis, I kind of break it down into 5 parts, because otherwise to me it's pretty overwhelming. Looking first at your long-term debt, your land payments, any machinery payments that occur year to year, and are fairly steady year to year. Your short-term debt that you have, anything that's crop year specific, so your seed costs, your fertilizer, crop insurance. Like I said, anything that's specific to an individual crop year and must be taken care of in that crop year. Your additional machinery costs, not like the payments themselves, but the cost to run. Your equipment costs money to run it. Like I said, the farm doc gives you a really good example, including labor costs at a set dollar per hour rate, fuel costs, wear and tear, etc. So that's a good way to put that in. If you want to pencil any, set dollar amount in for equipment breakdown that you may have, or any custom work that you have done. If you don't combine the grain yourself and it costs this much per acre for somebody else to do it for you, that's easy to pencil in. Then look at your family's living expenses. So you can individually list them out: house and vehicle payments, insurance, health and wellness costs, if you've got a student in college, anything like that. Those to me can be a little overwhelming and would be very tedious to list out. So maybe just look at it as a salary equivalent, like, hey, I want to make this much this year. This is what I could make maybe if I didn't farm, if I worked somewhere else. So lumping that together into $1 figure, looking at it kind of like a salary equivalent, might be a little bit easier way to pencil that out as well. And then the 5th thing, and I think the thing that gets overlooked and not thought about enough, is your profit goal and your growth and prosperity for your farm. So we're going to dive into that a little bit deeper as well. When you put values to growth and prosperity in a break-even analysis, it becomes even more powerful and even more, useful to help you pull the trigger. You can include business-related prosperity items, like equipment upgrades that you want to make, or profitability that would allow you to add another person to the operation, or land acquisitions that you maybe are looking at in the next few years. But there are other prosperity items for your family that you can think of as well. But penciling those in and saying, this dollar amount would allow us to do this, makes that break-even analysis, like I said, much more powerful and much more, inspiring to pull the trigger when the market gives you opportunities. And honestly, like when we're this far out ahead of time, and even looking at the next couple of crop years, it's okay to set lofty prosperity goals and even kind of stair step them out to give like a good, better, and best type of scenario to help you pull the trigger, so that when the market says, hey, I can get 450 cash, and if that puts me into the better category, or even, hey, this is going to be one of my best years in the last 5 years, like that kind of information makes you able to make those decisions with much more confidence. Our team of grain originators at FS Grain is here to help. We can help with just a simple template with kind of those good, better, and best scenarios that we can pencil in. And also, like I said, help with some of those cost estimate resources, whether those are actual seed, fertilizer, chemical type of inputs, or helping you look up some of those machinery costs and whatnot. And then also help you take that break-even analysis and determine some reasonable, I'll say, price targets. It's easy to just say, hey, $6 corn is my price target, but looking at what those are. And then also sometimes the market's not giving us those, but we can sort of build them looking at basis and futures and carry. So our team we're good at that, and we are happy to help with that. The earlier in the year that we see guys, looking to make price actions, they're always looking for upside potential, wanting to take advantage of the rally that we've seen, but also leave themselves open to additional market rally if possible. On one hand, I like to remind producers that they are always long physical grain, and do they really want to add complexity to their marketing strategy on a continual inventory? On the other hand, let's make as much money as we can. So we have some ideas for that as well. Keep in mind that that is not free. The options volatility recently has been very high. The market volatility has been high, so the cost of those are expensive. So typically we're buying options to set price floors. That's fairly expensive right now, while they are very attractive floors. We can offset that with some of those double up potentials by selling some options. We're generating more premium for those right now because of that volatility. So there's a balance to that, and we are happy to talk to you guys about that as well and how that can fit in to your marketing strategy. That's basically what I've put together. Were there any questions that were popped up?
No questions.
Okay. Any questions from the room in here?
Nope.
Alrighty, well, Brian is next. He's gonna talk about how the global markets kind of affect us here locally. Brian makes all of our sales with his team. Kind of my team works with buying the grain from the customers, and Brian's team works with making those sales. So he's got his finger on the pulse of the marketplace where your grain eventually winds up.
So hi, I'm Brian Rader. I'm the merchandising manager here at FS Grain. So we'll start with just an overview of some of the key factors the market is focusing on today. So we'll do kind of a bullet point format with some discussion around it. Most near term is the March 9th USDA supply and demand report. That's the typical monthly report, and that is next Tuesday. There is not much expectation that the USDA will make many changes on that. And that has also been a contributing factor to some of the recent weakness that we've seen. It's just the expectation there's just not much going to change there. That takes us into the March 31st, the prospective plantings and grain stocks report. This tends to get a lot more attention. It is a huge focus because it gives us kind of the cleanest USDA glimpse of what they expect for production here in the 2021 year. So we'll dig into the 21-22 balance sheet projections as well for both corn and beans. From a U.S. weather standpoint, it's always important. It's something that we look at every year. It becomes even more important when the balance sheets start to show the tight stocks that we're seeing now. So there'll be a huge focus on that. We look at that volatility through the growing season, and then it plays right into what Allie was talking about having those price targets. Weather markets tend to be volatile and quick, and they don't have as longer term trends as what you'd see in like the supply and demand fundamentals. So from a world production standpoint, there are issues that we're seeing outside of the US as well, and that's what has also brought more of a focus into what this US production is going to be. From a local basis standpoint, I would call that generally well supported. We've seen strong basis opportunities all year. Basically, before harvest was even over, we were seeing the strong demand in the export markets. So we're seeing that well supported in our area. We're fortunate in Northern Illinois. We have a lot of access to export markets as well as local processing. So we'll dig into the balance sheet possibilities. So I'd like to thank Midco for this information, and I really like the way they display this data. I'll start with the far right. This is the current USDA outlooks. Of course, these will be updated next Tuesday, so this would have been that last month's data. It's the current projections. It keeps the carryout relatively flat. So if we start at the top, it has the yield, the acreage at 92 million, and then you work your way down. It has all the demand functions with the carryout around 1.5 billion. So if we look at that red square that's more towards the center, this is taking kind of the current projections. So we have acres of corn around 92 to 94 million from the private estimates, and you work your way down the sheet and it gets you down to the 1.6 type of carryout. What I'd like to mention though is if you look along that yellow bar on the top, that has the yield changing. So you work further way to the left, you see that yield drop, and it holds all else equal because this early in the year we can't make a ton of adjustments based on the demand side, but what we can do is make assumptions on what that production is going to be. So as you can see, it doesn't take much of a yield adjustment to really make that ending stocks a very tight scenario. So some comments on the corn, a huge emphasis on production, which of course entails yield for the most part. The tightening US stocks are going to be forefront. We have huge demand from the export sector. as well as our local processing. From the world view, we're starting to see a little bit of issue in Brazil in the second crop. They're late planted, 55% as opposed to 92% last year. So there aren't huge issues. They are late, but they do expect to get that crop in. The biggest demand function that's changed here this year is China coming back into play. We hear a lot of talk about the replenishment of their reserves, and there's generally some lack of transparency in really what they're doing over there. So the soybean balance sheet, same type of outlook. The USDA current numbers on the right, they actually have that as a slight uptick on ending stocks from where we sit today. Shift over to the box towards the center, and this has us at the current estimates where the privates that would expect us to be here at the end of March. And down at the bottom, it has 115 million carryout, which is extremely tight with 2.5% stocks to use ratio. So there's very little room for error in the soybean production this year based on current demand. So the focus will be very high on the yield and weather scenario that we see from the soybean perspective. So some comments on that, high emphasis on production and yield. We feel it's generally well supported from a price standpoint. The biggest thing is that there's likely some multi-year impacts to this carryout. We don't see this getting solved within 1 year without a huge adjustment to a piece of demand. So from China's perspective, there's still some question about their recovering hog herd, and then some different strains of ASF that are still being discussed and the impacts that that'll have on their demand. So from the US crush margin standpoint, they remain very strong. So locally, we've shifted away from exports here in the spring, which we would expect from the seasonality of that demand. And we'll see a strong processing demand the remainder of this year. Those have been at record levels, and we would expect that has to be rationed off somewhat this year to remain liquid in our ending stocks even this year. So just a quick glimpse at the weather. So as we come into spring and into these planting intentions, the map on the left is the current drought monitor from the 25th. As you can see, we're seeing some significant dryness in the west, and portions of Illinois are also starting to see some ticks on the drought monitor. And then on the right, you see last year's monitor. So we have a lot less moisture to work with this year than last year. So that's all I have prepared for today. If there's any questions.
We've got a couple of questions.
Okay.
The first one is, at what price, if production is lower this fall, do we start to see demand start to ration off?
That is a tough question. I don't know that I have that exact answer. There are a lot of factors in that. So, well, both with corn and soybeans, from the feed standpoint and the byproducts of what they're producing, there are a lot of factors in that. So I don't know that I have that answer. We're not there yet.
Yeah. The other question is, with Brazil being nearly 40% behind average on planting pace for their safrinha corn, does that all the US to pick, I'm reading this as I go, to pick up more demand than we normally would because Brazil would be behind on their harvest timing?
Yes, I think it will impact some of that typical seasonality. And some commentary I read this morning is that the expectations of them producing a crop, there isn't a huge amount of concern. They are later. So the normal impacts you would see with a later crop could be a slightly smaller production, but overall, they do expect to grow that crop.
So do you anticipate, with some of the concern and knowing how far we are behind today, do you anticipate seeing some potential rallies within the market between now and then, but so maybe take advantage of some of this news that's kind of driving this?
Yeah, from a flat price perspective, I feel like the market is generally supported. I still have a bullish bias until we do see that rationing. So that question came up. I don't know that exact price when that rationing is. I'm not sure anybody knows. Otherwise, it would be easy to see it coming. But yes, I think generally that price is somewhat supported, and that goes in line with Ali's seasonality chart earlier. I was looking up there at the March timeframe where we're sitting today, and there was only like 2 years where March was the highest price. So
Right.
likely a slow cash movement month this month.
Yeah.
Cool.
All right.
No other questions?
Thank you for your time.
Do our poll.
So just a quick reminder to everyone that to answer the polls, we've got another one coming up, and would like to take a moment now to bring up Chuck Spencer. So he's going to spend some time again talking about the political side and some things that might impact our industry and our grain markets, both from the state and from the federal level. So Chuck, thank you for your time. Appreciate you being here.
Hold on, Chuck, we've got a poll up looking at percent sold for corn and beans. So if you see that on your screen,
There it is.
go ahead and click your response. These are, we're not tracking these and jotting these down. Don't worry, just kind of wanting to get a feel for where everyone is at. And then we will show the results as well. So full transparency here.
Thing is, I'm so far back.
Oh, yeah,
When I look at the screen,
yeah, go ahead.
I'm gonna get it.
You do. You.
You still look fine.
Yeah, you look good, Chuck.
Yeah.
Right here. All
Yeah,
right.
I know, I look
Let's,
so
see
far
where we're
back.
at.
You ready to go to the next poll or not?
We're gonna close this one.
Fantastic.
And then we will share the results. So looking at old crop corn, guys calling it 42% saying 90% or more sold. 25% saying 80 to 90, and then a couple of other responses in the lower range, but definitely would say 80 to 100 captures 3/4 of the responses that we have here. So.
Fantastic. And I just advanced the slides. Thank you for spending time with us today. We are gonna have some brief moments here.
There you go. You should be good.
All right, fantastic. Thank you. Oh, it was off. That helps. A little bit. So, yes, it's wonderful to spend some time this morning with all of you. And of course, legislative and regulatory outlooks, there's a lot of people providing them. What I'd like to do with you today is have you take the emotion out of what we talk about. So much of what we hear when it comes to political discussions tend to be filled with emotion. We can tune into the channels we want. We can look at certain types of updates. What's important though for all of us is to be engaged individuals within our communities and work for the policies that's going to be best for farmers, for agriculture, our state and our nation. And I think we need to make sure that we focus in those arenas whenever we talk about policies, whether it be on the state or federal level. I know Gromar Government Relations, we work to communicate, educate, and advocate on behalf of our system and our farmer owners. And I think that's important for us to make clear with everyone and share, is that when we come to work every day, we start thinking about what our mission and vision is and who owns a cooperative. And cooperatives are so important in this country and the fabric of our communities. We'll go here on a few things about state and federal outlooks with the time we have this morning, and then certainly what's important. And a state outlook, everyone knows we've got new House leadership, and we've been meeting remotely within our state General Assembly. And I say that to emphasize that the remote aspect of it is much like here today. We've had the opportunity to visit in person, and there's a certain dynamic that it comes with visiting in person. It also, though, is awfully convenient to sit at your desk, tune in, listen to speakers, and you click off. You don't have to drive anywhere. The one thing I do miss is barbecue, though, and I keep saying that, so I'm going to keep lobbying for it because that's what I like to do. But the House leadership, when I think about what's going on and how they're meeting remotely, we are not experiencing the same type of dialogue opportunities with members of the General Assembly as they go through their committee hearing process. I will make a plea to you that it's equally important to be emailing, to be communicating electronically with state members of the General Assembly, because as they go through and everyone begins to get their vaccinations and our state continues to open up its economy and our abilities to meet in person, it's going to be critical that we lay the groundwork between now and what is the traditional adjournment date of June 1st. After June 1st, the threshold for passing legislation is higher. But we know that within the House and Senate leadership that, and in those chambers, that the Democrats have a supermajority. So while that used to be a factor in past legislative assemblies, June 1st, it just makes the threshold a little bit more of a focus, and they still like to get traditionally done by June 1st. And what's on the agenda then is so important? Well, you've got the budget deficit. You're going to continue to hear the discussion over the finances in the state of Illinois. And that's critical to all of us. Of course, we've got a current, when I say the budget deficit, that's current paid bills. Depending on when you take your snapshot, for those of you familiar with accounting as an audits, you could say, well, it's $4 billion plus or minus some change. And of course, change adds up very quick when you're in those dollar categories. Why that is important to us is because then where are they going to find revenue sources? We just went through an election in November where the constitutional amendment was put on the ballot for the fair tax. It was a 10-point loss. The citizens of Illinois said, no, we do not want to see a fair tax implemented and we don't want our taxes raised. And the reason that we have this discussion today again is because we also saw the new Speaker of the House, Emanuel Chris Welch, who put forward a discussion about maybe we should still consider a progressive income tax provision for the state in this assembly, where we would raise the taxes on certain income categories and then dedicate the vast majority of that increase to paying off the pension or addressing pension deficit. Now, again, depending on where you want to take your snapshot of pension deficit, it could be between $144 to $261 billion. It's a lot of money, regardless of where you want to put the threshold. We do know that if you were dedicate the state budget process to paying down or eliminating the pension debt, it would take 1/2 of the General Assembly's current income stream dedicated to paying that off, or about $1,800 a year for individuals. That is a tremendous burden on the state of Illinois. It's going to hold us back economically if we do not address pension and the structure of pensions for the state of Illinois. And that is going to be a very, very important issue for us moving forward and for everyone who's involved with that. There's people who are watching probably who have employees involved with the state pension program who are really concerned about what types of reform measures would take place. We know that we have to have a type of fiscal plan in place, though, to be competitive with states around us. States around us have opened up. We've testified in a General Assembly in Missouri. We've also had testimonies in the state of Iowa as well. We've got Kentucky, Wisconsin, Indiana. They're putting a number of billboards, in fact, advertising campaigns you've seen from the state of Ohio, who is at least one state away, trying to attract business from this state to other states. So the cost structure of this state is going to be continually important. While we all love to be here, farmland assets, though, can't be moved across state boundary limits. And that's why it's so important for us to spend a little time talking about state budget, making sure that you're conveying your thoughts with the elected leaders about holding the line on competitive practices and the economic climate in Illinois. It's critical, particularly in agriculture. We may have high prices today, and we can thank Ali and others for this, right?
You got it.
That's right. But what we want to also make sure is that we have the climate moving forward. And we see some state issues cropping up that's going to be important. We've got the budget address from the governor who proposed to eliminate the biodiesel tax credit. That's been a very important component for Illinois farmers. We are known as a fill up state. So if you're trucking across I-80, there's an economic advantage to fill up in Illinois. So why would we want to take and remove that at this point in time? And of course, that type of tax provision, while proposed in the governor's address, would have to be approved or action taken in the General Assembly. Another reason to talk to your legislators. Bill introductions. We've had a significant number. We traditionally introduced this time of year. Pesticide is always a focus. We've got some provisions that would ban neonicotinoids, which have become a very important seed treatment to protect the seed quality and allow extended duration whenever we plant seeds early. Of course, everybody's chasing 100 bushel acre soybeans, and they have been shown that April's the month to plant those. That's colder soil conditions that have been in the past. So seed treatments and seed coatings have played an important role in achieving 100 bushel per acre goals for farmers, making sure that we have continued access to that. Glyphosate is also important. And of course, dicamba. Illinois will have the provision where there will be a cutoff date of June 20th, along with a temperature restriction of not applying it above 85 degrees. We're the only state in the nation that has that. June 20th cutoff date was shared by Indiana. Those are the only two states we're aware of that have cutoff dates for dicamba. My point is, when it comes to our crop protection products, we need to make sure we have continued access to technology and again, help be as productive as possible at the farmstead. Environmental justice, a phrase you will hear more and more, and there's going to be legislation introduced and already has been, where environmental justice provisions could be taken into consideration on the location of new facilities. Could it be agriculture facilities? Could it be chemical manufacturing facilities or manufacturing in itself? The people who live around them, and I know that there's been some controversy recently about an iron scrapyard in the south side of Chicago being proposed. Environmental justice may mean that businesses would have to actually pay compensation fees for those who live around them. And again, we have to think about the economic climate and competitive climate we have in this state. It's critical that we keep jobs and the economy moving in this country to be able to pay off the bills that we've racked up over time. And I will also say the Adopt a Legislator program. We need to talk and listen to one another. There's a wide variety of experiences that come from living in rural areas and having agricultural practices on a daily basis versus living in the highly urbanized area of the Chicago metropolitan area. We need to know that there's over 75% of the state assembly members come from Chicago and the Collier County areas. We've got to be able to dialogue with them, and they need to understand what we do as well. It's talking to one another and listening to one another that will achieve that type of outcome. Elections matter. And obviously, we had at the federal level a change in administration. We've had an inauguration take place where a message of unity was brought forward, very clear and highly received by the public. And yet I will stand here today and say that the alignment within the Congress and the Senate, as well as the administration, has been pushing forward a relief package that has had no real input or amendment accepted by the party in the minority status. And my point in drawing the attention to the two is that the nation likes to see progress made when it comes to the actions that is good for our country and good for our people. Obviously, a relief package when we're faced with the economic challenges of COVID is extremely important. At the same time, we've got to be able to target that relief package to people and to businesses that matter and who are indirectly impacted, as well as creating marketplace opportunities for continued economic growth. Mouthfuls, easy to say, hard to enact, but again, I will offer that the best outcomes come from a vigorous and strong debate, normal committee orders, and the ability for us to testify and have input. At Congress, we're doing the same thing. We're having virtual meetings. I'm involved right now with virtual meetings from the standpoint of meeting with members of Congress and their staff, conveying the messages, what's important. The Food and Agricultural Climate Alliance, climate change need to be done at the farm gate. That we need to make sure that we have policies that allow the advancement of opportunities when it comes to technology and its utilization, that we have a good process within the EPA to review pesticides, but a predictable one when it comes to the approval process, the fee structure, and the outcome for utilization. Those are important components. And as you see here on the federal outlook, tax structure is going to be important. Section 199, we had a tax jobs and Cuts Act of 2017 and 2019 amended that was extremely important. Cooperatives needed to be able to have this deduction under Section 199. And on January 19th, the previous administration chose to make a rule change that would impact farmers and the way they own their cooperatives and receive the benefits from their cooperatives. We're still trying to reverse that, had success in getting a bipartisan letter to the US Treasury Office asking for a meeting and a change to the rule that was proposed January 19th. Why is that important? January 20th was when the administration change took place. And so that's why a last minute rule like that traditionally has been looked on as suspect for why the change was waited till that long. And we're trying to work through that, and we feel comfortable with that. I've talked about climate change, policy and carbon contracts and carbon sequestration. Those are the buzzwords between now and the next 10 years. Programs and what you're going to be involved with, extremely important. I encourage you to look up on Google the Food and Agriculture Climate Alliance. And you'll note that the National Association of Cooperatives, Farmer Cooperatives, NCFC, the National Council of Farmer Cooperatives, you'd think I'd have that down by now, is co-chairing with the American Farm Bureau Federation. And they have got 41 organizations continuing to grow. I draw your attention to that because those policies that are set forward on that website will be the critical components within climate change provisions. Voluntary programs, incentive-based, allow the marketplace, the free marketplace, to determine carbon programs, and then allow farmers to benefit in the escalation of carbon values if they should go up. I ask you that before you've signed your contracts, or if you have, note who owns the data. Make sure that the farmers stay in control of the data that is being collected by these entities, and you have the opportunity to share in value should they rise. Those are going to be critical decisions to make as a producer, and could be another income stream that is going to be important. Could it involve land practice change? Could it involve increased cost at the farm level? It must be economically achievable and profit-based for agriculture to have long-term sustainability on the land. Another favorite word everybody likes to use. Sustainability of agriculture and the programs we have come when sustainability is achieved economically, farm by farm, across our country. Waters of the United States, a regulation highly important to private landowners, and that's going to be something that this administration, you will see, try to unwind what was done by the last administration. I will say that the last administrations met the objectives of most of agriculture, the majority of agriculture producers, which they wanted to make sure that they had the ability to have the production capacity on their property the way they saw fit, and that wetlands determinations had a process of taking place through a regulated environment. That was critically important. There's a lot of questions about waters of the United States coming up. And then the FIFRA is the acronym for Federal Insecticide, Fungicide, and Rodenticide Act. And that's the process in which chemistry is approved. Chemistry, crop protectants, insecticides, pesticides, making sure that that process is well-funded, in place, and is respected from the scientists that are in EPA looking at the best outcomes. Nutrient loss reduction strategies, still a topic, still extremely important. But if we do the carbon and climate change programs, most likely those conservation programs will translate into water quality improvements as well. So agriculture has a lot on its plate. There's a lot of people looking for what agriculture and farmers are going to be doing, how those programs impact you, and I want to emphasize that your voice is as critical today as it's ever been, making sure that we're there conveying what we need to see on these programs, and which has been made by the priority of this incoming administration. Climate change is going to be a priority in every one of the functions of this cabinet, whether it's USDA, national security, education, EPA, and I could go on. So we have to have a voice at the table, be unified in our approach, and be able to deliver those messages. With that, I appreciate your attention today.
Do we have any questions for Chuck?
None at the moment, but if you have them, I'm around, available for the rest of the program, and we can always transition back in. So at this time, Corey?
Thank you, Chuck. Appreciate it. Well, it sounds like, as we all know, there are a ton of changes coming, and so we'll keep an eye on that. And that's one of the benefits, I think, of doing business with FS Grain, is that we do have the partners with Growmark and the other FS members who we can start to look at and start to plan and identify these issues that are coming up and try to be a part of the solution overall. So thank you very much again, Chuck. The first poll, I didn't follow the wonderful agenda that Ali provided me that I actually have sitting right here next to me. And so I apologize for the confusion a little bit earlier, but we do have another poll, and this is the winner of this poll gets a wonderful prize. I
To
don't-
be determined.
To be,
We'll
I
see how
was
many
gonna say,
winners
I'm
we
not sure
have.
what the wonderful prize is, but we will get something, but we do want to have a little fun with this. So let's look, put your crystal ball out, and let's start thinking about what prices look like on the corn price, on the December 2021 corn futures price. So there's a long list of multiple options there, I think. Why don't you guys answer that question? And then the second half of this poll is the November soybean 2021 price. So again, let's get those crystal balls out and spend just a few minutes answering those questions. And I don't know that we'll be able to get obviously the person now, so we've got plenty of time to figure out what that prize will be. So we will make sure we hold on to those and continue to share that as we move along.
And the winner will be the person who guesses closest without going over.
Oh, so it's the Price is Right game. So
It is Price is
closest
Right.
without going over.
Yeah.
So similar to putting those offers in, right? You put
Right.
that offer in, like Ali was saying earlier, at maybe some of us put non-reasonable offers out there at $6, $7, and we don't get there, we're not gonna get hit. So make sure that's more of
Yeah,
a reasonable
Market's
offer.
gotta trade through it.
Good. Well, hey, I believe after we're answering that poll, this starts to really wrap up our program today. One of the things we wanted to do was make sure that this program was timely and informative for you. I feel like we've done a team here has done a nice job of talking about some marketing opportunities and some things to look at. Some of it might seem pretty, oh, well, that just seems to make common sense or kind of elementary, but we always need that reminder sometimes. So with that, thank you, Ali. Brian, nice job on giving some hints on what's going on. Sounds like we're fairly strong in the market right now, and it's interesting looking at some of those charts, and doesn't take much to get us below 1 billion bushel of corn. So certainly might have some friendly markets as we continue to move forward. And again, thank you, Chuck, for your rundown of all the things that we've got going on there politically from a legislative standpoint, and you do a really good job of lobbying, because the first thing that you said to me when you came in was, "Where's the barbecue?" So that was exactly right. With that, guys, we do want to be your trusted partner, the person that you're working with. We thank you for that business. We don't take that lightly at all. So when we move forward in this, remember this marketing outlook will be available again on Facebook, will be available on our website, will be available through our bid sheets as well. But keep an eye out, go to YouTube, follow our YouTube channel that's out there, our FS Grain YouTube channel that's out there. We're gonna start putting more of these videos on. I've challenged my team to continue to market and work with all of you on a regular basis through some sort of video presentation like this. So you will see multiple videos in the near future on a regular basis. So with that being said, if there are no more questions.
We have our poll results
Oh.
from our price. We'll kind of give you close with that. Yeah, we'll share it. And actually, so 525 was the corn, the highest, I guess, vote getter for corn, and 1350 for beans.
Yeah, okay, sorry guys for you
So-
getting to see me really up close there, but I don't have good eyes and I can't read that, so.
Yeah.
Well, that's outstanding. So where are we at with beans?
1350 was the most vote getter, I guess we'd say, but there was definitely kind of a concentration between like 1275 and up to 1350. So
Great. Well, I will end by, if you have any marketing questions or any follow-ups from this presentation, don't hesitate to contact your local representative at FS Grain, or feel free to email us or reach out to us here, Ally or Brian or myself or Kaylee, regarding any questions that you might have. We again thank you for your business. Thank you for your time today. We know time is precious, and so we appreciate you spending that with us here today. Have a wonderful day and a very, very safe spring. Thank you.